What is going on, guys? Thank you, Chef here. What is poppin'? We're in episode 4. Today's video bit, but it's okay. Today we're talking about liquidity concepts, specifically relative equal lows and highs, and high and low resistant highs and lows. It's a little bit wordy, but without further ado, let's get on to it. Let's start with relative equal highs and lows. Relative equal highs and lows are highs and lows that are relatively in the same price range without overlapping each other. And what does that mean? So if you have relative equal highs, we have, like I taught in, I forgot which episode, prior episodes, where we have prominent highs. We have highs relatively in the same price range, but not overlapping each other. Meaning you have a high here, a slightly lower high, and another slightly lower high. It could be as many highs as you want. And same for the downside, except we have a low, slightly higher low, and a slightly higher low. And I'm going to show you that in the examples in the video. Relative equal highs and lows are very strong drawn liquidities. And if I haven't explained what drawn liquidities are, it's basically where does price want to reverse? In other words, go from a buy program to a sell program, or go from a sell program to a buy program. And relative equal highs and lows are an extreme draw on liquidity. It's one of the strongest draws on liquidity. Here's an example of relative equal highs, what I was talking about. See over here, we have a high here, we have a high here, and a high here. They're not all exactly the same price level, but they're roughly within the same price level, right? Relative equal highs. And what can we expect from relative equal highs? We can expect price wanting to go for them, and knowing that this could be a potential draw on liquidity, we can wait for market confirmation and enter a short position, targeting potentially other relative equal lows or is potential draw on liquidity. Right now, here's an example. This is on the 1 minute time frame. We have relative equal highs resting here. Price is in a buy program, takes those relative equal highs out, and we get a reaction downwards. Price is a little bit choppy, but again, you're never going to get the price action you want from charts, right? It's always going to be something you don't expect, and you have to adapt to that, really. So we do have choppy price action, but if we see how much we're in drawdown, this is just a mock entry. But relative to the premium discount in later videos, we're going to talk about that. Price does not want to be in the upper half of this range. We want motion lower. Now what you do get if we target here, you can even target these lows, right? These are not very relative equal lows, but roughly they're low resistance, which I'm going to talk about in this video as well. This could be a target where you leave the short, right? Stop loss at this high. And that's a model in and of itself. And this is the basic stuff you should understand as a trader, how market moves, where we want to draw to, not just any points of liquidity, because it doesn't necessarily mean we take out a higher low that we're going to continue or reverse in that direction. But knowing draws on liquidity, knowing relative equal highs, in this example, we can form a bias. And in here, we take out highs. So what are we looking? We're looking to short. And we're going to be discussing, obviously, way more about entries, models, imbalances, fair value gaps, which I'm going to get into later episodes, not as like episode 10 or something, because I'm going to be teaching time a lot. And if we zoom out a little bit more, we can see that this whole sell program here actually goes all the way into these lows over here. And you can even see how this is still in the 1 minute. After we take out this low, we have a reversal here. Right, not all the way to this high, these highs made over here. But for someone who's scalping, this is also a setup right here we could take, right? So the draws here were respected. We made this new high over here. That price failed to reach. But after we take out these highs, these relative equal highs, what does price do? Continues all the way into the higher time frame direction. Now, let's go to the sell side example. We have relative equal lows, where price is going higher and leaving out lows, relatively the same level. Again, same concept. What we can expect is for price, we wait for price to hit this key level, this draw liquidity, and what we can do is form a setup for a long. Knowing, anticipating that this is a draw on liquidity, we can anticipate longs here targeting a different high. Now, this is the example I used for shorts, specifically relative equal highs, and we can turn off them on a higher time frame. You see, this was the original setup. If we held on to this low in the 1 minute, remember, is a long trade, but this is on the 15-minute chart. And what are these lows over here? The relative equal lows. Price runs through them, and we go a little bit under. We really spend time in there. But look at the reaction we get afterwards. Higher. So one thing to also remember is this is fractal, and this is what I mean to show you by showing higher time frame within the same setup or price action, is we have fractal price action at all times. Meaning, if you're taking a short in a lower time frame, it can be a lower time frame distribution, but it could be just a higher time frame retracement. Meaning, on the higher time frame, on the hourly candles, it could just be price retracing before going higher, but the lower time frame would be price dumping and distributing. And you could be taking those on shorts, right? Just because price action is bullish, it doesn't mean you can't short the market, and vice versa. Just because higher time frame is showing a certain bias, it doesn't mean we can't take the opposite direction. We just have to be modest in our targets and understand price action and price delivery. That said, I want you guys to pause the video and try to find the relative equal lows here. It should be easy, but just pause it and see if you can find it. Hopefully pause it. Now you can look at it. Here were the relative equal lows. Low here, and low here. This is a prime draw for price to reverse. And what do? We wait for confirmation, and we're going to be talking about it in different videos. But for now, you just need to understand liquidity. You're not going to be a trader, even if you watch all my videos once they're all made, right? You can watch it 2 times. You still want to be a good trader. It is something that takes time and experience and effort. So don't worry about which concepts you don't know yet. Understand the fundamentals, because if you understand the fundamentals, everything else is just like paperwork. It's very light work. This is the most important fundamental concepts, because this is how you understand direction and confirmation in your trades. This is how you build confidence in how you're trading, is knowing how price is moving. Ultimately, it's always going to liquidity and imbalances. I keep repeating these words, imbalances, which maybe you know or don't know, or don't worry, we're going to be discussing that in later videos. Right, and that was the basics for relative equal highs and lows. I'm going to hop on TradingView after I discuss all the other concepts and show you live examples. Now let's move on to high and low resistance liquidity. To start off, low resistance liquidity are highs and lows that did not take at a previous high and low, respectively, leaving unmitigated highs and lows within a range. Let's go back to the other examples. This can be an example of low resistance lows, right? And you can actually consider them the same. So low resistance liquidity can be relative equal lows, but not all relative equal lows are low resistance liquidities, because sometimes we can have, see if there's examples. Like for example, here we have a low here, and low here. These are relative equal lows, but they're low resistance because why? They didn't take each other out. This low failed to take out this low. This low failed to take out this low. We can even talk about these, right? So that's low resistance liquidity. And on the other hand, high resistance, we took out all these relative equal lows. Sorry, low resistance liquidity, low resistance highs, which are relative equal highs. And we left this one, high resistance liquidity. And what is high resistance liquidity? It is a high low that took out low resistance liquidity. Simple stuff. We can use low resistance liquidity as targets that are within a buy/sell program, and that usually is just on a higher time frame basis. And we can also expect high resistance liquidity not to be taken out within that given time frame. High resistance liquidity can also be on a higher time frame, low resistance liquidity, right? Everything is fractal. So within the given time frame, we can expect the high resistance liquidity not to be taken out, meaning we can form a reversal off that key area. Right. Here are highs being made in a sell program, and we're failing to take each consecutive high out. And we can form either part of this buy program targets where we want to leave the markets in profit, or we're waiting for price to take out the low resistance liquidity, low resistance highs, to then plot a reversal. See for yourself. Can you see it? Can you see what's happening here? It may take time. I'd say it definitely took time for me. It's nothing to be worried about. You have these highs made here. This is a debatable high in terms of how many buy stops are above here. But we have this sell program. Price reverses in this area, turns into a buy program, takes out all the low resistance liquidity, because that's what price wants. Algorithm wants to absorb liquidity. We take out this high resistance high because look at these highs here. One, two, three. We took it out. And then we retested this high again. We started displacing downwards again. We have to also anticipate a little bit high resistance highs, because if we only know price action, if your price was only at this candle, we don't know for sure if it's going to be taken out again. So it's something that we really have to anticipate, and we do that through price action, just knowing what time are we in, what else are you taking out, what imbalances, etc. But don't worry about that. We see that price took all this out. It took out a high resistance high. We made a new high resistance high, and that high was respected. And look at the reaction we get afterwards. And all we have to do is just capitalize. We just have to capitalize on any of this move, on any part of this move. Meaning we don't have to reach until price goes all the way down here. We can be profitable within 1, 2, 3 candles, right? You can just see that for yourself. You can just logically see that. Same thing for the downside. For low resistant lows, we have consecutive lows that fail to take each other out. I forgot to finish this. As a target for a sub program. Ignore that. I don't know, are you recording this or editing that? Right, and once we get a high that's most likely into a key level, we can expect these low resistant lows to be taken out as part of the sell program, and we can capitalize off of pretty much any level that's it, because we'll be in profit there. And the only thing is each low you're going to be targeting, or the bigger your trade is in terms of range, the longer it's going to take, and the lesser your win rate will be. Just statistically speaking, higher RR yields lesser win rates, just statistically speaking. Right. Now, this is actually, I was actually trying to trade this price action, and I called out where we're going to draw and where my TPs would be. But regardless, I didn't take the trades because my psyche got the best of me. I was waiting for too much confirmation in the charts, but without further ado, if you haven't spotted it, these are all the lows this buy program left. All of these lows. All of these lows. When I was trading the New York session, I was calling out these relative equal lows. I was thinking we're going to draw at this low over here. Now look where it takes our price. You go as low as to here, failing to take this low, and we saw a reversal to a buy program. And I was calling this high, this 930 high, which we can, if you guys can kind of see, we take it out. But we see how this sub program to absorb every single buyer at highs or lows, resting that had sell stop resting below lows. These are low resistance lows, and this whole area I would consider relative equal lows, especially these two, these two. So that's a prime draw for price to reverse. And I was trying to catch price action here, but I couldn't execute because I was waiting for too much confirmation. I was too biased in terms of what I want to see in the lower time frame, because this, I believe, is on the 5-minute charts. Anyways, and some important notes for relative equal highs and lows, high and low resistance highs and lows. Relative equal highs and relative equal lows may not always be a draw on liquidity. And the draw on liquidity can also be at other key levels, especially imbalances, which we'll talk about in later videos. But know that doesn't mean every single relative high you plot out and price takes out is going to reverse there. I guarantee it's going to have a reaction, meaning if you take out relative equal highs, we're going to get into there, get bearish reaction, but it doesn't mean we're going to do a bearish distribution all the way down to other lows. So it's important to understand that. And how do we determine that? One, through experience, watching charts, tape reading, just constantly learning. You're going to understand what price action is doing, what happened before that. What was price action doing before that, going into those highs, right? Was that the target before? So, correlating higher time frame with lower time frame. Maybe just because lower time frame took a certain relative high doesn't mean higher time frame wants to do that. Is higher time frame more bullish than the lower time frame? Understand? So, and a buy and sell program does not always have to take out every single low resistance liquidity within a range to create a high resistance, lower high resistance high. Meaning, over here is an example. Price, theoretically, if we took out all these lows and we reversed here at this price level, we stopped here, maybe accumulated, and then went higher, this high over here this low over here made will be considered a high resistance high. You don't have to take out every single low resistance liquidity. We just have to take a reasonable amount of low resistance to create high resistance. And now we're gonna hop at the trading view. I'll piggyback with relative equal highs and relative equal lows, and we're gonna go back to higher and low resistance liquidity. I want to show an example from today's price action trade ICT took today, which I was looking to take, but again, my psyche got the best of me. I was too antsy about it. I was like, I want to see. I want to see more confirmation, which lower time frame never presented. Regardless, what are these relative equal highs? And this is also relative equal high. Something else I forgot to mention: if we have relative equal highs, but we don't take out all of the highs within that lower price range. So, what's this? Oops. No, let's put this. So we don't have to take all of that to reverse. Just the area itself produces a lot of liquidity. Why? Let's delete this actually, just so you can see better. Retail sees this as a support level. They see that price wants to go into here once, into here twice, or thrice, 1, 2, 3, and they view it as a resistance level. Yes. So naturally, retail is thinking, okay, we want to short this. We want to take the momentum that's here. And we're going to have stops here, here, and there. So for all of them that were still in the longs, that were not taken out, so it had to be below this level, were all taken out right here. Price took this liquidity. Now look at the reaction we had. That's a model. I wanted to short target these lows. The end, these are what? Oh my days. What are these? Right, you're saying it, relative equal lows. You're right. What does price do? Takes them out, and we kind of just consolidate for the rest of the day. And I will explain that in later videos. For you, it's just important to understand how price action works. Today was actually perfect in terms of presenting and showing an example where we can plot out our entries. We confirmed you want to short. We just took out these highs. Boom. Enter a shorts, wait for our market structure confirmations for value gaps, order blocks, breaker blocks, whatever. Target low for our trade. Oh. Right, let's show one more example with relative highs and lows. We're going to move on to a high resistance, low resistance liquidity. Oh. Let's show some relative highs on the 50-minute. Right now, this is a small example. We can also see on the 1 minute. Right here. Oops. In terms of finding relative highs and lows, as clearly in the 1 minute, you're just not going to see that same market structure. But in terms of where price, where reverses, where it wants to continue off of, it's more so off prominent highs. Over here we have relative equal highs. What does price do? Takes it out, reverses. Shows relative equal lows. Oh, beautiful over here. Just do it in one line because you can just see that yourself. What does price do? Has a reaction. Again, all you need to do is capitalize out that reaction. Ideally, if you want, reactions targeting low resistance liquidity, self-program like some highs within here, right? That said, all I got to prove to you is the reaction. Those are like amazingly perfect lows to react off of. Boom. And all that was just a higher time frame retracement. Let's see, we have more examples. Right here. Now, what we didn't do is we didn't reverse around this price level. We really dug deep into here. Right? So that was just a bit not ideal in terms of trying to plot a reversal in this area. We went way lower, right? About 300 ticks lower, which isn't that much, but we can still expect, we can still wait for a reversal here, right? We can still wait for it. Just because we didn't reverse right here. Ideally, that's what we want because that's shows us that price wants to stop there and we want to enter into a buy program. But price isn't always going to do what you want. It's always going to be perfect. I think I showed enough relative lows and highs. Maybe I could show you one more example. Something that, yes, right here. Jumps out to me. Not quite. So this is an example where it's not quite a relative equal high, right? Because what did this high do? It took this high, meaning that any liquidity above here, any liquidity above there, was taken by this high. So sellers were absorbed there. Therefore, there'd just be less at this level. But it doesn't mean that, you know, this high cannot be used as liquidity. But we do draw there. We take it out. Boom. Right here. Relative equal lows. What does price do? This is the most ideal reaction. And this low is taken. Maybe. Doesn't matter. This is the most ideal reaction for reversal setup because we want price to wick it. We want to know that within that time frame, price went within here and then closed even higher, right? That's reaction we want to see. We took out enough liquidity here. Now reverse. That was in 50-minute. Now, I feel like the high and low resistance liquidity concept is a bit easier to understand, a bit easier to follow. Regardless, I still want to show it. Let's start with the highs here. We have this whole range over here. Oops. This whole range here, and within that range, we have highs here. I don't want to plot all of them out. You can also plot some out, do some of your own homework. Actually, let's have that all the highs. I show the unmitigated highs, which is here, which is here, which on lower time frame could be some here. But we see that we only took out these highs over here. We only took out these low resistance highs. And after we took them out, we left this high over here. And we can see for that short period, for exactly about 4 hours, not a short period, but you know, relative to all the candles here, we managed to get a reaction downwards. We can capitalize on that, right? Just because we didn't take out relative equal highs, we took out enough liquidity, enough buy side liquidity. That's also another important concept to understand is how much has price moved in a direction. Meaning, did price take out enough buy side liquidity to reverse? And what do we do here? Took out these highs here, and we managed to leave a wick on this high. We wick through it, and then we wait for confirmation. And that's a big thing, is we want to anticipate that we're going to draw here. We go into a lower time frame to confirm our suspicions. And ultimately, we want to have stops above the high because price can go anywhere within here and still go lower. A drawdown shouldn't scare us. What can we do? You go on a lower time frame. Let's go on a lower time frame to have proper targets. What? This is some BS. Okay, can we go on the 5-minute? Yes. Okay, perfect. You can go on the 5-minute, right? And we can see this low resistance low over here, this engineered low within this whole range. That's the easiest target. That's the first target within this range. Ultimate target would be here. But we're in hindsight right now. We wouldn't target this low. You don't need it, first of all. I'm teaching how you can be profitable. Get out of the charts. You wake up for 9:30 openings, trade, make your $1,000, go back to bed, do it next day. Ideally, that's what you want to be doing. You want to be taking those first targets, the low cortisol, low stress trades. You want to be in and out. You don't want to be doing this all day. You have so much more better things to do in reality. For one, learning, journaling, working out, studying, and I don't mean school, but studying real education, things you really want to know about. True study, true education to the mind, true knowledge, whether that be Bible, history, poetry, art. Right? There's like actually so much more better things to do than the charts. You want to be off the charts as fast as possible. That's what I think. That's my humble opinion. And you can disagree with me if you like. That said, let's look at low resistance liquidity and high resistance liquidity. We can we could show it right here as well. Show it right here as well. Right here. I such a liar. Like I had this schemed. It's pre-recorded. The cam doesn't even match with the recording. Like I can show you. See the mouse? And watch your cursor. Right. We have a choppy range over here. Choppy range over here. And we have low here, relative lows, and a high resistance low over here. What did we do? We took out liquidity. Took out liquidity here. This is a high resistance low. What does the market do? It goes into a sub program, takes it out. I took trades here. I think I showed it in other videos. And what does price do? Price makes a high resistance low, a new high resistance low, after taking out this range as lows and this high resistance low. So we can expect this low here to be respected because it's high resistance, because we took out enough sell side to reverse, and this should be a support level, not retail support. Using support, defining support using ICT concepts, and then we can plot a long off here, going to the 1 minute, even 15-second, up to you, targeting recent highs, getting in and out. It is this simple, folks. It is just what's separating you and me and everyone else, is how much time do you want to give this? You want to give it 6 months, and if in 6 months it doesn't work out, you quit? You want to give it a year, 2 years, 3 years? How many years do you want to give it? And the real answer is as long as it takes. That's the real answer. That's the real answer. Because in reality, the thing you're going to be battling isn't how much you know. It's going to be battling your emotions, your fears, and yourself. That's the real victory in all this. Is how long does it take to conquer your psyche, your spirit, and your mind, your emotions? How long does it take to conquer them? That's the ultimate question. And that's going to vary between every individual. Everyone has their own habits, their own behaviors, their own stumbling blocks in life. Identify your stumbling blocks. Identify your fears and emotions. Identify what you're doing wrong psychologically. Why not many people want to do that? They want to live their daily life with their habits, and they don't want to change for the charts, even though that's the number one thing it demands. True change, true reconditioning of the mind. Like, for one thing, trading teaches you how easy it is to really make money. And that said, why don't you want to like change your entire life, your entire way of living, so you can optimize and be your best form in trading? Because this is such an exit. It is such an exit for the average person. But the problem is the average person does not want to sacrifice for this. And why? That's a very hard question I don't understand. Why don't you want to sacrifice everything for it? Seriously. I understand people say, oh, I have this responsibility. Okay. But it's the want. Do you want to sacrifice everything for it? And that's when you can get people. Because you say, oh, yeah, I want to be a trader, but I have to do this. But do they actually want to sacrifice everything? Do they actually want to put their time? People say, oh, I don't have enough time. But even if you had the time, would you actually do it? And they'll most likely say, yeah, I would. But they most likely wouldn't. Because guess what? You actually never have time. The perfect time will never exist. It's actually a lie. It's a lie you made up in your head to justify your unproductivity in the moment, and then be comfortable with the fact that you're going to be productive at a more opportune time, which is never going to happen. If you're older than like 18, my age, you should know that the best. Life always is coming and slapping you. Any plans you have, opportune time is now, because the moment is real. The past doesn't exist. The future is not going to be like you imagine. So be in the moment. Wake up and do the work and believe. That said, that's going to be the end of liquidity. I'm obviously going to be discussing about liquidity in other examples, talking about price action. I'm going to be talking about, liquidity within certain time frames and sessions. That's obviously going to be important, but these are all the basics to liquidity. And if you have any questions, I want you to go into my Discord server. Ask away. I'm online. I got nothing better to do. Ask away. This is the end of liquidity series. Next video, I'm going to talk about time and price. Introduction to time and price. And I'm going to be laying out how I'm going to be formatting the rest of the playlist. That said, I thank everyone for watching. I thank you. See you in the next one.